Welcome to the Friday edition of Tech Stocks Daily, your go-to source for all things tech on the NASDAQ. Today, we're diving deep into Shopify's savvy moves with AI, the buzz around Microsoft's iPhone moment in AI technology, and how Google faces an AI-driven shakeup in internet search. Shopify is expanding its analytics prowess with a strategic team acquisition, while Microsoft's AI innovations signal massive growth. Meanwhile, Google is gearing up to defend its search engine throne against AI-powered challengers. It's a thrilling time in tech, with strategies, innovations, and competitive battles reshaping the future. Stay tuned as we break down these developments, offering insights into what they mean for investors and the tech landscape at large. Let's get started. Shopify has been grabbing headlines for a series of reasons, demonstrating the dynamic landscape of e-commerce and the volatility inherent in tech stocks. At the heart of today's news is Shopify's strategic move to acqui-hire the team from AI-driven analytics startup Peel Insights. This acquisition underscores Shopify's ambition to bolster its analytics capabilities, providing merchants on its platform with advanced tools to decipher their sales data and enhance customer retention. Peel Insights, since its inception in 2019, has carved a niche for itself by developing an AI-powered product, Magic Dash, that simplifies complex sales data into actionable insights for online sellers. This innovation aligns perfectly with Shopify's ecosystem, primarily serving small to medium-sized businesses seeking to optimize their online sales strategies. Peel's integration with popular Shopify apps and its impressive roster of clients speak volumes about its utility and the value it has provided to e-commerce merchants. This move by Shopify isn't isolated. The e-commerce platform has demonstrated a consistent interest in expanding its analytics and AI capabilities, seen through past acquisitions like the AR startup Primer and the investment in the analytics centralization tool Triple Whale. This pattern of strategic acquisitions and investments highlights Shopify's commitment to offering a more data-driven, insightful experience for its merchants, possibly reshaping the e-commerce landscape with a focus on intelligent analytics. On another front, Shopify has been under the investor's microscope, evidenced by the recent fluctuation in its stock price. This week witnessed a sharp decline in Shopify's stock, significantly underperforming the market. Despite Shopify posting a 29% jump in sales and maintaining profitability, investor reactions were lukewarm following a cautious outlook for the upcoming quarter. This scenario exemplifies the high expectations placed on tech giants and the harsh consequences of failing to meet them, even when the company's overall health appears robust. Furthermore, the stock's movement was influenced by unusual options activity, indicating a bearish sentiment among some big players. Financial analyses reveal a mix of puts and calls, with a leaning towards skepticism about Shopify's short-term stock price trajectory. This options activity, coupled with a volatile stock market performance, paints a picture of the uncertainties clouding Shopify's immediate future, despite its solid fundamentals. To add another layer, critique of Shopify's valuation post-earnings release stirred debate among investors and analysts. While Shopify continues to show strong top-line growth, concerns linger around its profitability and whether its lofty market capitalization is justifiable given the current financial metrics. In essence, Shopify's journey reflects the complexities of navigating the e-commerce space amid high expectations and a rapidly evolving tech landscape. Through strategic acquisitions like Peel Insights, Shopify aims to stay ahead of the curve, yet investor sentiments and market dynamics continue to challenge the company's trajectory. Whether these moves will solidify Shopify's position as a leader in the e-commerce platform space or not remains a focal point of watchful eyes in the tech and financial sectors. Microsoft found itself in the spotlight for several notable developments, marking an eventful day for the tech titan. One of the most compelling stories comes from the investment front, where analysts from Wedbush Securities have heralded what they're calling Microsoft's iPhone moment in artificial intelligence. This comparison to one of tech's biggest success stories signals a significant shift, suggesting that Microsoft's investments in AI could be reaching a watershed moment of widespread adoption and popularity. Specifically, Microsoft's AI-driven Copilot system is gaining major momentum, suggesting a promising horizon not just for the technology itself, but for the company's expansive cloud portfolio, including Azure. This development is critical, demonstrating AI's transformational potential across the tech landscape and its capacity to further bolster Microsoft's cloud services revenue, which saw a striking 23% year-over-year increase in the first quarter. In the gaming sector, Microsoft touted the upcoming launch of its Xbox mobile store, slated for July. This move positions Microsoft as a direct challenger to the tightly controlled app ecosystems of Apple and Google, promising an independent culling platform initially stocked with mobile games from Microsoft and its associated studios. By creating a cross-platform gaming experience, Microsoft aims to untether gamers from the constraints of singular ecosystems, making game libraries, identities, and rewards portable across devices. This strategy not only diversifies Microsoft's gaming offerings, but also taps into the burgeoning mobile gaming market, which continues to ascend as smartphone adoption peaks globally. However, not all news was as forward-looking. Microsoft's president, Brad Smith, has been summoned by the House Committee on Homeland Security to discuss cybersecurity in the wake of recent government email hacks. This hearing, set for May 22nd, underscores the perennial challenges of cybersecurity, emphasizing Microsoft's pivotal role in the digital defenses of both the government and the private sector. Given the company's substantial footprint in global email software, cybersecurity remains a paramount concern, accentuated by previous breaches involving high-level U.S. officials. This situation highlights the ongoing dialogue between major tech companies and governmental bodies regarding the balance of innovation, privacy, and security. Meanwhile, despite these significant advancements and challenges, Microsoft's stock response seemed muted. Following a quarter of impressive earnings growth, particularly spotlighting a 17% revenue increase and a hefty 20% rise in earnings per share, it appears the market had already baked these achievements into Microsoft's valuation. This expectation of perfection illustrates the high bar set for Microsoft, reflecting both the company's substantial achievements and the premium investors pay for its continued growth and industry leadership. In conclusion, Microsoft's day in the news encapsulates the multifaceted nature of its operations, from groundbreaking strides in AI and gaming to the pressing matters of cybersecurity, all wrapped within the broader narrative of investor expectations and market dynamics. The diversity and scope of these developments underscore the company's significant impact on the tech sector and its ongoing evolution as a central player in shaping the future of technology. In today's tech landscape, Google found itself at the epicenter of the news, primarily due to the impending storm stirred up by advancements in artificial intelligence and the web of competition in the internet search domain. The buzz centers around Alphabet Inc.'s Google and its position in the face of innovative AI challengers set to redefine the rules of the search engine game. Leading the charge, OpenAI's anticipated announcement on the eve of Google's I/O conference captured widespread attention. Their potential unveiling of a direct search engine competitor, leveraging the prowess of ChatGPT, hints at an impending shift in internet search dynamics. This move is noteworthy, given ChatGPT's rapid ascent to popularity and its integration within Microsoft's Bing, pointing to Microsoft's stake in shaping search engine futures alongside its investment in OpenAI. Moreover, the entrance of Perplexity AI into the arena showcases the growing appetite for AI-driven direct answers over the traditional link-based responses that Google has mastered. The daring venture by Perplexity AI, valued at $1 billion and founded by an alumnus of AI giants OpenAI and DeepMind, mirrors a modern-day David versus Goliath narrative. It represents a significant industry shift towards leveraging AI for a more concise, direct interaction with information. In parallel, Google's AI ventures, despite experiencing some publicized hiccups with its Bard and Gemini projects, have not dampened the corporation's ambitious AI pursuits. Instead, these challenges seem to have fueled a recalibration and a renewed focus on refining its AI offerings, with a keen eye on integrating generative AI models into its search processes and possibly reconceptualizing its foundational search engine to meet evolving user expectations in the AI era. Amidst this backdrop of innovation and competition, Google's stronghold in the search engine market appears both challenged and invigorated. The company's sustained investment in AI research and development, alongside its strategic maneuvers to blend generative AI with its search functionalities, underscores a relentless pursuit of evolution to maintain its dominion in a rapidly transforming digital ecosystem. However, the core question remains: can Google's endeavors to innovate within the AI space and redefine its search engine experience outpace the agile and AI-native newcomers threatening to encroach on its territory? The company's deep-rooted presence in global digital practices, combined with ongoing financial health and a track record of pioneering internet technologies, presents a formidable bastion against the siege of AI-driven challengers. Now, over to you, viewers. As Google gears up to navigate these turbulent technological waters, what are your thoughts on the future of internet search engines and the role AI will play in shaping our digital interactions? Are we witnessing the dawn of a new era in information discovery, or will the incumbent giants like Google successfully evolve to stay ahead of the curve? Drop your comments below and let's dive into this discussion. Today, let's dive into the swirling vortex surrounding Shopify and dissect whether it's a buy, sell, or hold situation. Given the current landscape, I'm leaning towards a cautious hold on Shopify. Here's why. Shopify's latest strategic move to acquire the team from Peel Insights presents an exciting growth avenue. This aligns perfectly with Shopify's drive towards enhancing its analytics and AI capabilities, an area that's becoming increasingly crucial in the e-commerce industry. This acquisition signals Shopify's commitment to empowering its merchants with advanced tools, potentially leading to improved sales strategies and customer retention. However, navigating this decision isn't without its complexities. Shopify's stock performance has been underwhelming recently, showing a sharp decline and underperformance in the market, even in the face of robust sales growth and profitability. This dichotomy brings to light the high expectations and the brutal investor reactions tech companies like Shopify face. Moreover, unusual options activity indicating a bearish sentiment adds a layer of uncertainty around its short-term trajectory. The world of e-commerce is notoriously volatile, and Shopify's aggressive investment in AI and analytics, while promising, does not guarantee immediate returns. Given the cautious outlook for the upcoming quarter and concerns around its lofty valuation, the prudent course of action seems to be a hold. This stance is reinforced by the potential that Shopify's strategic acquisitions and emphasis on intelligent analytics hold for reshaping the e-commerce landscape in the longer term. Let's remember, though, the stock market is inherently unpredictable, and while Shopify shows strong growth prospects, it's also facing significant challenges. The hold recommendation is based on a balanced view of its strong fundamentals against the backdrop of current market volatility and investor skepticism. And there you have it. Whether it's a buy, sell, or hold, doing your own research is critical. Markets fluctuate, and staying informed is your best defense in the unpredictable battlefield of stock investment. I'm here to provide insights and updates, but your investment decisions should always be backed by thorough personal research and consideration of your financial situation and risk tolerance. Happy investing. In conclusion, today's market activity offered a whirlwind tour across the tech board, from Shopify's strategic moves aiming to amplify its analytics and AI capabilities to Microsoft's iPhone moment in AI, signaling profound growth prospects. Meanwhile, Google stands at the threshold of a new era, with AI challengers poised to redefine internet search standards. This landscape of innovation, strategic shifts, and competitive dynamics underscores the high stakes and rapid evolution characterizing the tech sector. With these developments, it's clear the tech industry remains a vibrant and transformative force, offering both challenges and opportunities for companies and investors alike. As the market navigates through these innovations and competitive pressures, staying informed and agile will be key to understanding and capitalizing on these trends. Remember to do your homework, keep an eye on these evolving stories, and consider how they fit into your broader investment or interest landscape. Happy investing, and have a fantastic weekend.